This is the Energy Makers Show, featuring the innovators, financiers, and policymakers focused on the global energy demand. Brought to you by NRG, moving clean energy forward. And here's your host, Paul Dickerson.
Hi, I'm Paul Dickerson, and welcome to episode 106 of the Energy Makers Show. Our topic today, commercializing technology for oil and gas. As Russ Capper checks in with his highlights from moderating the Society of Petroleum Engineers' recent all-star panel of Shenoy, Chief Technology Officer, ConocoPhillips, Ashok Belani, Executive Vice President Technology for Schlumberger Limited, and Einar Gamman, partner at Energy Ventures. All that right after this.
At BKD, we understand the constantly shifting nature of the energy industry. As a national CPA and advisory firm, we serve energy clients from the beginning to the end of the cycle. Our experienced energy advisors serve approximately 300 energy companies in exploration, midstream, downstream, oilfield services, and power production. Plus, we're the largest North American member of the Praxity Global Alliance, which means we can help you wherever you operate. Contact a BKD advisor or visit us online to learn more.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show. We now enter the SPE presentation of commercializing technology for oil and gas.
And now to the very special panel that we have here today. First, Ram Shenoy, Chief Technology Officer with ConocoPhillips. Ram, welcome to the panel.
Glad to be here, Russ, and I'd like to thank the SPE for extending the invitation to participate in this afternoon's forum.
Great. Next up, Ashok Belani, the Executive Vice President of Technology with Schlumberger Limited.
Delighted to be here. Thanks, Russ. I also thank Energy Ventures and SPE for being here.
Great. And lastly, Einar Gamman, partner with Energy Ventures.
So I'm also very pleased to be here. I'm looking forward to the discussion.
Okay. To kick things off, I'm going to ask each panel member to give a short overview of their background, followed by some summary comments on the topic of the challenge of technology commercialization in the oil and gas industry. First, Einar?
Yeah, as Russ said, my name is Einar Gamman. I'm a senior partner with Energy Ventures. We're a focused venture capital firm with a global footprint. And we specialize in commercialization of technologies, products and services to the oil and gas industry. I've personally worked in the oil and gas industry since I graduated in marine engineering in 1984. I later also took an MBA in France, and I have throughout my career worked with development and implementation of new technologies in the oil and gas industry. I have worked professionally with seed and venture capital for the last 14 years. From a venture capital and private equity point of view, the main challenge with technology commercialization is that we mainly invest in single product service companies that cannot cross-leverage cash flow from other products or services, meaning that we need to finance the so-called valley of death with risk capital, or equity if you like. So the $100 million question becomes, how can we improve and accelerate adoption? But if you allow me, I'd like to provoke a little bit as a starting point. And so I am actually going to state that most clients would actually benefit from allowing for early adoption without applying their standard supply chain or commodity purchasing principles. To a single product company, venture-backed or private-backed, this is probably one of the largest hurdles that we're seeing. Faster adoption in our industry is dependent on seamless approach going from the lab to the field. And at the end, what we all want is to create a win-win situation. Thank you.
You bet. Good job. Ashok.
My name is Ashok Belani. I work for Schlumberger as the Executive Vice President for Technology. I had the technology development, research and development and manufacturing functions, along with information technology and some of the marketing and quality HSE work that we do at Schlumberger. Schlumberger is the largest service company in the oil and gas sector. We have a very wide footprint in practically every country that has some oil or gas production. And we have been in the business of developing technology and commercializing it for more than 80 years. So in my view, the best way to measure the success of how technology is commercialized is to examine the results of the industry and to see if there are lots of new things that have happened in the industry over the past decade or not. And if you look at all the deep water exploration discoveries that have happened, or look at the increase in deep water production that has happened over the past 10 years, if you look at the unconventional oil and gas revolution that has happened in the United States, and then there are all the LNG successes that have happened, all in, and I'm talking of particular successes in all of these areas, which are very technology-rich areas over the past decade, then you see that this industry has actually done extremely well in the past decade. And when you relate that to the fact that in the 90s oil and gas prices were much lower, say oil price was hovering between $20 and $30, and then when the whole developing countries' growth profile took off and the commodities prices went up to numbers like $100 a barrel, then a lot of risk-taking and technology development money came into the industry, and as a result of that made many, many new developments possible in this industry. So in the last 7 or 8 years, we've seen significant new technology developments which have enabled newer and newer exploration and production practices to give good results in the world. And when people talk about things which are disruptive or things which are making new things happen, the U.S. supply rising to where it is today is a disruptive event, if you like, in not only in the oil and gas industry, but actually in this case in the whole world and the economy of the whole world. The fact that the gas production in the United States is in somewhat of a glut position right now is a disruptive event. It goes from the United States planning to import LNG to exporting LNG, which is a very disruptive state of circumstances. And all this is a result of the fact that this industry is very, very good at risk-taking and putting new technology to work, if you like. If there is good technology that can yield good results in exploration and production, there is money in this industry to be gained or to be had. And I agree with Einar that it is a turf that is a very ripe and rich turf to play in. You know.
Sounds good. Ram, your turn.
My name's Ram Shenoy. I've been the Chief Technology Officer at ConocoPhillips for about a year and a half. Before that, I spent about 20 years in the oil and gas industry on the service side. The first thing I want to do is give the perspective from an operator on the economic and industrial scale context for oil and gas. Economic because unless there's the appropriate opportunity for wealth creation, for technological innovation, the innovation in the path to commercialization doesn't happen. Scale, because scale is fundamental to understanding what's a reasonable rate of adoption. So viewing if I look at an operator at our business, our end products are commodities, right? So we don't naturally think of using technology to differentiate them. They're just commodities. And so that typically predisposes us to look at when we're trying to improve our margins in terms of reducing cost. It's not a typical commodity. It's one that's dominated by global geopolitics. Most of the supply is dominated by government-run or government-influenced companies who may operate or be held to different standards, legal, environmental, and shareholder standards compared with publicly traded majors and independents. It's an industry which manages some amazing risks. Just like any industry, if you poorly manage those risks, the exposure runs in the order of billions of dollars, and that affects the stance of operators in terms of adopting technology. Among the risks, for instance, we have to take on a significant exposure to operating in countries who may choose to appropriate the infrastructure and investment we put in place, for example. Okay? And then in all of this, if you look at the net margins extracted by the oil and gas operators are publicly traded, typically the average margins are in the order of 8 to 10%. People sometimes forget when they read about high oil company profits that there are some amazing volumes on which those profits are earned. That's important because if one wants to adopt new technology, one has to see the translation in terms of economic returns, and that influences operator decisions. And finally, if you look at the scale of typical oil and gas investment, each $100 million to $300 million exploration well, which may have maybe around a 50% chance of success. The oil field developments typically cost billions of dollars to invest, and over multiple years, typically a decade before you see cash flow. Okay, so there's a huge latency in terms of seeing the impact of technology. The key thing for us is for the last 18 months, we have declared that we will aim to grow profitably and organically, which is very different from how the company grew in the past. It grew primarily by mergers and acquisition. Why that's important is if one wants to grow profitably and organically, technology suddenly becomes much more important in terms of how you apply technology to increase your reserves, grow your production, reduce your costs. It's fundamentally, over the last 18 months, taken much more of a center stage in terms of the senior management team as to how we access technical innovation and apply it in our business operation. The challenge here is for a company our size, in fact, for a company any size in the oil and gas industry, the breadth of technological footprint that the industry covered means that no one company can really monopolize the innovation. And so one of the exercises we've been going through is understanding where technology really confers a competitive advantage for us. How do we access it? Because we're certainly not going to be able to have proprietary capabilities everywhere. And so we do see a role in terms of strengthening the way in which we work with service companies to access the innovation services they provide to us, as well as in venture capital firms and with institutions. I think the last point I want to make here is if there's a single bottleneck that I perceive in terms of rate of adoption, I will equate the valley of death with the ability to translate from lab prototypes to deployment in the field. Field experimentation in the industry, I think, could benefit from much more conscious scientific design in terms of extracting the maximum information of how a technology behaves for the least amount of dollars. It's primarily because that's so expensive that there's typically an obstacle for all the players in terms of working out who pays, invests in that. And after that, there's also the question of we cooperate to create the value and we compete to divide it. And that's probably needs to be a conversation that needs to be clearer as to how each wins.
All right, we'll be back with more from this all-star panel on commercializing technology in oil and gas right after this.
Production of natural gas from shale is arguably the biggest and best story in the history of the American oil and gas business the last 50 years. Okay, I mean, no doubt about that.
And that's the remarkable thing about energy and transformations in general. Anytime you can remove the geologic uncertainty to an extent and really boil it down to technology, the entire question is entirely different, right? It really is about how do we make it work. It becomes a scientific issue rather than an issue of uncertainty.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show, and now more from Russ Capper at the SPE presentation.
Commercialization of technology. Technology is ubiquitous, omnipresent, goes everything from Angry Birds on iPhones to going to Mars. If you guys saw an area in your business today that it could be mechanical, chemical, it could be water, digital, mobile, that is not being addressed as aggressively as you would like it to be addressed through innovation and entrepreneurship, what would that be? And let's start with you, Einar.
Well, I think the industry is quite good in addressing the challenges, but as a community, I think we have a big responsibility, and that is to get more oil out of the ground. It is a fact that wherever you look in the world where oil and gas is being explored or produced, there is still more than 50% in average left behind in the ground. And this is where we need to become better. And the only thing that can drive it is technology. So that would be my starting point.
Okay.
Mm-hmm.
So obviously there's no one short, very concise answer to your question, Russ, but I'll pick the one that's on the top of the hopper in my mind, let's say. I think there is one challenge that oil and gas is going to have to face, and it's not really, in the end, technology per se. It's the people who can bring the technology to bear in the oil and gas industry. So currently, I really feel personally that I spend my time a little bit between California and Texas, and I think generally, if I may put a lot of technologies under encompassing term software, if you want, there is software or digital capability which is changing the way surgeries are done, or banks are run, or cars are run, and so on. There is a lot of automation, integration-related software technologies that are being used in many different industries. In fact, practically every industry in the world. In this scenario, for the oil and gas industry to attract the right software capability into the industry is that much more difficult. So I cannot see that someone graduating from a computer science degree from Carnegie Mellon or MIT or Stanford is standing up and saying he's going to join the oil and gas industry today. As a result of that, software-related integration capability will be much slower than it should be today in the oil and gas world. And what Einar was speaking about, or Ram was talking about, all of these require significant software capability in the industry, and it's going to be very slow for it to happen.
You know, it's interesting that you say that, because even in your opening remarks, you pointed out these key innovation things that have happened in the last 10 years. I think that the space sort of has a slow reputation because it's compared often to the digital world. And we all see innovation happening so fast there that it makes your space look slow.
Well, unfortunately, you will have people wanting to join Google or Apple if they have a computer science degree than to join ConocoPhillips or Schlumberger, you know. So can we stand up to the challenge and get the right people in? This is what people like Einar, Ram, and I think on a daily basis, and I believe this is a challenge currently.
Yeah,
Ram?
so just on the last question you put, I'm going to suggest that say the electronics or the information technology industry is much higher in terms of coverage of innovation in the public spotlight than oil and gas. I think people who track the history of the industry and see the development, Ashok was telling us before about the advances in horizontal wells and the lengths in which have been done. That happens year in, year out. It's just doesn't make the New York Times or the Wall Street Journal, but people in the industry know that. So I think a little bit there's a perception issue, which is one needs to really make fair comparisons as to how progress is being measured. With respect, you asked about a challenge. You know, what are significant challenges? I'll say this. One is there's no shortage of activity. You know, capital people trying to look at problems at the high level. There's a real talent, and it's very difficult to work out what exactly is the problem for which a technological solution is economically viable. Okay, and that really doesn't mean you need lots more investment. You need the right talent, asking the right question, and following the right path, and that's just very difficult. There's not a recipe I can give this audience on that, except to say that it's 95% of the hard work. If you were to ask me about a particular topic, I'm going to single out something that Ashok mentioned on unconventionals. So, since the history of oil and gas, there have been 4 significant events that have added $1 trillion barrels of oil equivalent each time, right? So the first was Edwin Drake simply drilling for oil in the subsurface in the 1850s. Okay, that added 1 trillion barrels of oil equivalent. The second was in the first half of the 20th century, where people began applying subsurface science to oil and gas. So the Schlumberger brothers inventing the resistivity log were part of it, but there were a whole bunch of other things that added 1 trillion barrels of oil equivalent. Okay, so there were 70 years between those events. The next one was going offshore, okay, in the late 1940s, okay? And the final one is unconventionals, okay? Unconventionals by themselves, so from 2005 to 2013, which is not a long time, have added 1 trillion barrels of oil equivalent that the world did not know were economically viable before, okay? And the funny thing is this: we all acknowledge within the industry that the state of understanding of these reservoirs is about 50 years behind what traditional conventional reservoirs is. So it's amazingly immature.
All right, and we'll be back shortly with more on commercializing technology in oil and gas.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now back to the Energy Makers Show with your host, Paul Dickerson.
Welcome back to the Energy Makers Show, and now more from Russ Capper at the SPE presentation.
Well, I've heard before, like from the entrepreneur position, that their perspective is that in dealing with big companies like the two of yours, that there's a reluctance for a decision maker to make the decision there because there's not much upside for a large company employee versus, the way an entrepreneur thinks, and therefore they're reluctant to make those decisions, and therefore you end up with the reputation of being slow to accept. Is there any validity at all in that?
So I think it very much depends, speaking from the operator side, it very much depends on how the operator views adoption of technology, and I think different operators are going to be different. So I wouldn't presume to speak for the class as a whole. If I was to speak for us, I would say we really classify our stance by the resource type and the growth opportunity. So, for instance, in unconventional reservoirs, we think there really isn't a clear industry leader. We think we have a favored position, and we think it's rational to attempt to get significant competitive advantage through the early adoption of technology. If I was to contrast that with the deep water, ConocoPhillips has really coming into deep water after about a 10-year lull in activity. Given the risks in deep water, we're quite comfortable saying that we are going to follow to get to the state of the art, which is going to be very different. We are very cognizant that we have to find a way to access technical innovation from startups. And Einar mentioned this business of the supply chain interface. So one of the ways we've tried to bypass that in the last 24 months is we have set up a venture investing activity where our intent is actually not to make an investment for the equity return. It's really to make investments to work with those companies where we see a possibility of working with the company to delineate the specific oil field market. And the value we bring as an investor is primarily in helping shape and delineate the market. The value for us, hopefully, is early and advantaged access to the technology that the startup offers. And whether it then gets sold to a large service company or otherwise is really not our end goal. The big prize for us is getting competitive advantage in terms of deployment of the technology.
Okay. Well, I think you guys have sort of asked this question, came in from the field, though, but maybe we can kind of organize it better. How do you evaluate, and it would be for all three of you, how do you evaluate a technology? How do you know if an idea is worth funding, getting into, getting involved, and what framework do you use to do that?
I would say that we generally have a map of things which we would find interesting in investing in. Then, if we then see something that comes in and falls under that category, I would say that the first test, the quality test, is that it actually needs to have the potential to bring a commercial efficiency gain to the end user. That is really important. I would also say that when we are in the technology space, if it has patent protection or IP protection, this is obvious of very big interest to us. Then what we will be looking at are those guys coming in presenting. Do we actually think they can make it? Can they deliver in actually pulling this technology through as a team? Or do we need to enhance that team? But for us, the overarching thing is obviously that we have to see that this will create shareholder values, because if we invest, we will be an active shareholder in your company, will help the entrepreneur bring this to the market. But at the end, it's all about getting a good return on the money we invest.
Mm-hmm. I'm curious, I guess, Ashok and Ram, do you guys see people that show up that have not gone to a venture capitalist already and say, I've got this idea, are you interested? And I think ConocoPhillips has a venture arm too, right?
We do. Again, we don't provide the majority of funding for startups. We evaluate startups which typically have been funded through other means, and we're looking at prospects for path to eventual commercialization. But regardless of that, we get solicitations all the time from all sorts of individuals who may not have gone through a venture capital approach to a venture capitalist, as I'm sure most large companies do.
Mm-hmm. And what do you do with them?
So we take a serious look at it, but again, one of the challenges we have, as in most large companies, is prioritizing resources. So you asked about how do we evaluate ideas. Again, I will say that we've sort of redefined our strategy as a company over the last 18 months. So one of the things we have tried to understand is where are the key growth directions of the company, and sort of direct our investment in technology in only those areas. So those growth areas are unconventional reservoirs, deep water. We have a significant resource position in oil sands, and our challenge is to improve the economics of the oil sands to make it more competitive with unconventionals and deep water. We have some significant crown jewels in the conventional assets in our for instance, in Alaska and the North Sea, and we're looking to understand how we optimize the production from those assets. And so over the last 24 months, we've been really holding technology suggestions as to how do they impact one of these things. And if they don't, or if we don't see that they meet a certain, shall I say, qualitative hurdle rate, then we choose not to pursue it.
Maybe I'll add a thought which I think Ram will agree with me, that in companies like ConocoPhillips or Schlumberger, there exists always, either in a separate organization or embedded in the organization, intellectual capital which is always listening, absorbing, collaborating, or working with new ideas. And the new ideas coming from inside or outside the company. So switching to my case of Schlumberger, we have a very large research organization and an enabling technologies organization which is working very widely inside and outside. And when I say widely, I really mean widely in the sense that they have reaches into practically every university of repute in the world, and they have reaches into Saint-Gobain in Paris or Massachusetts General Hospital or DuPont or General Electric, or they have a very wide reach where they are looking at new ideas. So there is plenty of channels, if you like, of communication of new ideas into the innovation funnel of large companies such as Schlumberger.
All right, and we'll be back shortly with more on commercializing technology in oil and gas.
This is the Energy Makers Show, brought to you by NRG, moving clean energy forward. And now, back to the Energy Makers Show with your host, Paul Dickerson.
Well, welcome back, and continuing on with the SPE presentation.
Okay, I get the feeling that we do have lots of very early stage entrepreneurs sort of tuned in. This one might have already been answered to a degree, but Anita asked how to fund a lab prototype to a field demo.
This is the most challenging step in the developing or commercialization of new technology.
Well, I think you mentioned it as the bottleneck too in the process.
It is the bottleneck. Right, yeah. Going from a lab prototype to a field prototype in the oil and gas industry is challenging for all the reasons that Ram outlined before, because the risk you're taking when you are in the field is so much bigger that your small piece of technology may not necessarily warrant changing the process or the larger integrated system of whatever drills the deep water well or something. This is very challenging. To an entrepreneur who has a piece of technology which he has tested in the lab, from that to actually having a field implementation, and at that implementation it's still a trial, it's still a prototype, that step require a champion in Statoil or a champion in Schlumberger or a champion. Actually, in this case, it cannot be funded by a champion in Energy Ventures, I would say. That's not sufficient, if you like, because that brings the money, but it does not bring the capability of creating that field prototype.
So if you were in, it was Anita that wrote that in, if you were in her position, would you be going directly to a Statoil or finding a champion as opposed to finding funds?
I would say at that time you have to find a champion. Now, and Energy Ventures might help you find a champion. That's possible, right? But it's the champion you're looking for, not the funding at that time, if you want. You know, you are looking for the funding too, but more than the funding, you need that champion.
Okay. So what do all three of you think of this emergence of incubators, accelerators? We have one here in Houston focused strictly on the energy world, the Surge Accelerator. Would you recommend that these startup people consider that path, or is it helpful or not helpful?
I think it depends on the maturity of their concept. I think for the early stages of maturing an idea, certainly to, if we're talking about hardware or even software, to the point of proof of concept or prototypes, I think they can be tremendously helpful. Just tagging off the conversation just immediately before, I think it's essential when one is getting to understanding how to scale things up. You've got to involve some of the major players in terms of full-scale demonstration. And frankly, that really is the bottleneck. There's no shortage of good ideas being worked in the hopper within the industry, particularly in those countries where there are very good incentives. You can see that there's a proliferation of startups all energetically working, right? Their entire bottleneck is that last, if you like, mile to commercialization.
So with respect to accelerators, I see some clear advantages for a young entrepreneur or an entrepreneur to actually join them, and that is you will meet people with the same challenge, and you will meet people that can help you with the generic challenges of being a startup. But there will not be people there normally who can help you with the specific challenges. So, and that is where I think the next step, then you really need people that have been in there and done it before, in terms of actually taking that step from the lab via the field trials to a commercial product.
Okay. What would you do if you weren't where you are today and you had this killer idea and you were right there at that bottleneck log jam?
So, if I compare what I know now compared to where I was a scientist, junior scientist and engineer 15 years ago. The thing that I think I've learned is the complexity of inserting a technology into well-established practices of developing an oil field, right? There's a lot of inertia in the system, and in some cases with good reason, right? There are all these safe operating practices that operators have to go through and so on. So there can be tremendous switching costs in terms of trying to insert a technology. That really needs a very good understanding from any new entrepreneur. They need to really get a good appreciation for how their technology can disrupt and work out the path by which to incentivize that disruption. Okay, because there will be tremendous inertia trying to prevent it.
Yeah, because you're saying the technology might present a great economic advantage, but it might not be so big when you look at what has to take place to get it there.
That's correct, right? That's the challenge of scale that I was alluding to in my opening remarks. It's true that, for instance, an industry such as the cell phone industry also has global scale, but the granularity of switching a technology in cell phones is so much smaller than switching a technology in and out of Eagle-Ford operations, for instance.
So get smarter about the impact of your idea would be very helpful. Ashok, would you add anything to that? If you were the scientist, the young innovator that had an idea trying to break through that bottleneck?
I think all the points that are being made here are right on the money. Maybe the only perspective I have to bring something new into this perspective. I don't think it's any different in any other industry either. The young innovator, or the old innovator for that matter, who has a new idea, has to figure out how his little piece of technology, in this case we are making the issue that it's a small piece of technology which disrupts a large established practice.
Okay, and here's a question for you, Ashok. How do you choose between build in your R&D labs versus buying externally? Are these competing entities, and how do you deal with that?
Yeah, I think this is a very good question, and certainly in today's day and date, this is a question that becomes more and more difficult to deal with, because there is a lot of possibilities of buying, just because of what Ram said earlier about the fact that there is a large number of small companies doing innovative things out there. The issue we have all the time is that it does have a disruptive effect on the rest of the processes in the company, so it has to be evaluated in the bigger picture all the time. We would obviously always like to have the time to market advantage of something that exists, but the time to market advantage has to be weighed in with respect to, first of all, the cost of the acquisition, of course, but that's the easy part. The hard part is the integration into the rest of the system. But we are well past the hurdle that used to get into the build versus buy decisions, which was the not invented here inside the company. We are well past that today. Today, the world has generally accepted that companies with large portfolios are going to make technology acquisitions no matter what, so it is going to happen. There is a certain amount of build and a certain amount of buy. In fact, today when I discuss with the management team in Schlumberger, our expense on build is approximately equal to our expense on buy today.
Pretty interesting.
And it's going to continue to be that way.
And that wraps up our highlights of the Society of Petroleum Engineers presentation on commercializing technology in oil and gas. It also wraps up this episode of the Energy Makers Show, seen right here at TheEnergyMakers.com.